Hello everyone, welcome to the ninth episode of Prelims Basics. So here we are going to see a little bit more on the external sector. That is, so what is FDI? Any FII that is more than 10 percentage, you call it what? FDI. Even later, if you reduce the FII by, let us say 5 percentage, or you reduce that FII to 1 percentage, it still continues to remain as an FDI. Means once you get the designation, once an FDI, always an FDI. Clear, people? That is the first thing to remember. Then, apart from this, what else is there? Apart from, you have American Depository Receipts and GDR, Global Depository Receipts. Now, let me be very clear here with one thing. The American Depository Receipts or GDR, through these routes, the capital flow that is coming into the country has declined drastically. That is basically after 2017, we are not hearing anything about ADR or GDR even in current affairs. All right. But just let us try to understand this. So basically, the idea here is the Indian shares of any company, okay, shares of any company is brought by an American financial institution, okay, and they will issue what? ADR, which will be traded where in New York Stock Exchange, which can be brought by Americans. That is the advantage. So an average American may not be knowing about what is it, which stock in India is good, which stock in India is bad. They may not be knowing it. But a financial institution in USA, what they will do is they will, let us say, for example, invest in Infosys. Okay. And then what they will do, they'll buy the shares. Once they buy the shares, they will convert it into American depository receipts. And that will trade where in New York Stock Exchange. Clear, people? Global depository receipt is similar to ADR, with only difference being that global depository receipts trades in every part of the world other than USA. Same thing it is. That is, you want to invest in a company which is not the home company, it is a foreign company. But directly you're not doing it, you're doing it through depository receipts. Coming to the next topic, which is currency convertibility. Now, current account in balance of payment, we have current account, correct? Current account, I told you, it is basically recurring in nature. You have import, export, you have non-factor income services, like banking, insurance. Then you have factor income, that is rent, wages, profit, interest. Then you have transfer payments like grants, remittances, and gifts. So for all these transactions which happens on a regular basis, you should be able to convert the currency into any international currency very easily. Correct. So that is the idea there. Whereas in the case of a capital account, we don't allow 100% convertibility. Why? Capital account means it includes what? FDI, FII, correct. So if 100% convertibility is allowed, that would mean any country can invest in any sector in our economy. That is, imagine 100% FDI is being allowed in defense sector. Can we do that? Obviously not, because there is an internal security threat issue as well as external security threat issue. So we don't entertain it. Clear, people? So currency convertibility is allowed in current account, but 100%. Whereas in capital account, it is not 100%. That is why you will always keep reading about what? The automatic route as well as the RBI or government approved route. These are the two routes through which capital flows can come into the country. Clear, people? Moving on to the next topic, which is Vostro account. Special rupee Vostro accounts have been opened in India to carry out or to help in India-Russia trade relations. Clear, people? India-Russia trade relations, it is allowed. Vostro is a Latin word which means yours. That means I am holding your account in my currency. That is what it simply means. I am holding your account in my currency in terms of India Russia relationship, how it is. India is holding Russia's account in Indian rupee. Clear? So, account of foreign bank of Russia is held in rupee. All import and export transactions will be held again in rupee. Why are we doing this? Because Swift has posed a ban. Swift, which is a messaging system for all the economic transactions or financial transactions that takes place at an international level. Swift messaging platform has banned what? Banned Russia from using it. Clear? Thereby making what? Trade difficult. So to bypass that Swift ban, India and Russia is using it so that rupee will be only currency that is used there. Then this will help in de-dollarization of economy. That is last year, especially from February to September, we basically witnessed what? A lot of FII outflow. Why? This is not because Indian economy was doing poorly, but it was because dollar was doing incredibly well. And that is why the finance minister went on record to say that it is not because the rupee is weak, but dollar is strong. And that is very true. Dollar became very strong there economically. Clear. US economy, inflation increased, unemployment decreased, and US dollar started strengthening on the back of it. And because US dollar started strengthening there, what happened? And how did it strengthen? Because when inflation increases, what will any bank do? Inflation increases, the interest rate will go up. But when interest rate goes up, what happens? Supply of dollar will decrease. And supply of dollar decrease means automatically its value started going up. Clear? Thereby, by default, it depreciated the value of rupee. Now, because of this adverse event that took place last year, on which Indian government or RBI did not have any control, we are moving towards a path where we are trying to de-dollarize the economy, which means we are trying to reduce the dependency on dollar. Clear, people? Then we are also trying to make what? Rupee international. Say, for example, right now more than 80% of international transactions is taking place in what? Dollar. Whereas India's presence, if you see internationally, it is only about 1.6 percentage. Clear. So if we are thinking about becoming a 5 trillion economy, or even if we are thinking about, overtaking China or keeping China under control, it is very much important that just like how China entered into the SDR. What is SDR? Special drawing rights of the IMF. How China entered it, where you have currencies like dollar, euro, pound, yen. The Chinese yuan is also there, or Chinese renminbi is there. Correct? So, into this list, who should enter now? Rupee should enter. Only then we can even remotely say, or we can even remotely fathom about overtaking China. Clear, people? Moving on to the next topic, America Competes Act. So it is basically what it is. These are procedures for foreign nationals, means including Indians, with an ownership interest in a startup entity to self petition for classification as a W1 non migrant. When you talk about a W1 non migrant, these are like transitional migrants. Okay, that is, they are there for a certain period of time inside USA. So, how will it benefit Indians? It will provide more opportunities for Indian talent abroad. So, let us say you have an ownership interest in a startup entity. Then once you have W1 non-immigrant status means you can actually go and work in USA. This will actually help in what? Reducing the unemployment burden in the country. Clear, people? With that, we come to an end of today's episode. Any suggestions, any comments that you have, please put it up in the comment section. Happy studying. God bless. Take care.